All right. Hey guys, thanks everybody for joining. Today we have with us our CTO Manoj, part of the engineering team, Casey, Alexi, and Anand. Thanks everybody for joining. And today we want to talk about something that we've not talked about a lot, and we haven't made a lot of details public. And that is the goals and principles and details behind how the Portal DEX network operates. So to take a step back and focus a little bit on the problem, until this day, there's not been a truly frictionless cross-chain protocol that is transparent, decentralized, and doesn't have a lot of custodial risk. So swapping tokens from one chain to the other needs to happen exactly like it happens on a centralized exchange. That's the gold standard, but without custodial risk. So if you've been following us, if you've been part of the newsletter updates, you know that we've demonstrated the first layer 2 swaps between Bitcoin and Ethereum, and we've demonstrated swaps between ordinals and payments locked up in Lightning channels, and that we're working with other single chain DEXs. But the most important thing to remember is that the current state of cross-chain aggregators or bridges is not anywhere near where it should be. So broadly, there are three approaches to performing cross-chain exchange. First one is using a cross-chain bridge, whether you're talking about Axelar or Wormhole or any of those bridges. There's a multi-sig custodian that custodies chain A assets, and they issue chain B assets in return. And the trust is basically in the custodians to maintain the peg and redeemability at all times. You're no stranger to, bridge collapses and hacks. Just the top 5 bridge collapses in the last year have lost about 1.3 billion of customer funds. It's a terrible thing. And to me, it appears like the exchangers has moved on from centralized exchanges to the pseudo centralized exchanges under the guise of bridges. The second one is cross-chain communication protocols that claim to be a general purpose messaging platforms between different chains. And basically, the messaging services and the messaging layers are extraneous to either of the blockchains that they're communicating back and forth between. And the trust is centralized in either the oracle or the protocol that maintains these layers, message layers. You're basically replacing one problem with another. And general purpose cross-chain communication isn't possible because there's nothing binding on each side. And the third thing, which is what we picked, if you've been following us, is the atomic swap approach to making cross-chain exchange fast, cheap, accessible. And the reason why we believe that it is important is we see this as the only viable route to hyperbitcoinization. Why? The entire thesis behind Bitcoin replacing a fiat currency depends on if there were no other blockchain assets that people can seamlessly and trustlessly or trust minimized way trade against, then the entire thesis and the increase in adoption and the spirals in Bitcoin are entirely dependent on fiat gateways. We all know fiat gateways could be easily controlled, regulated out of existence, bank accounts basically blacklisted, and lots of vectors of attack that technology can't surpass or surmount. So it's essential, in our view, to have trust minimized cross-chain markets. And that's exactly what we've been building. Is there demand for this? Absolutely. There's a ton of demand for this. A lot of Bitcoin, last we checked, about 500,000 Bitcoin were locked in bridges because the users actually wanted access to DeFi protocols and utility that is on other chains. So the ideal user experience, we continue to reiterate, is that you have your assets from different blockchains in one wallet, and then you basically have a Uniswap-like cross-chain exchange experience right from that interface. And the goal behind Portal Text, or the three guiding principles behind it, is one, offer Bitcoiners who are highly suspicious of custodial solutions access to the utility of alternate chains in a seamless, non-custodial manner. Provide these chains access to the big user base and liquidity of Bitcoin, and aggregate liquidity without actually having to steal liquidity from any chain and lock it up on a third chain. That's what a lot of these interchain bridges try to do. And so we don't want that. We want these corresponding layer one chains to have a lot of liquidity, but have just the seamless exchangeability to one another. So what does this require? One, a network which facilitates interchain liquidity and aggregation should provide value to three sets of users. One, people who provide liquidity. Market makers, LPs, they want to just come in without having to jump through three bridges, go to a bridge, get this asset, go to another bridge, take this asset and stake it. You want to have one seamless operation. So you can lock up your Bitcoin and then get yield for providing liquidity for a specific duration of time. That should be incentivized in the protocol. Two, people who actually maintain the chain and keep track of who gets what, who has staked how much, how many transactions are clearing, how the rewards need to be distributed. They need to be incentivized. And then the final, but the biggest piece of the puzzle is traders, people who actually use this and pay the fees and drive up the volume. They need to have a seamless experience, minimal slippage, low transaction fees, everything that they want in a centralized exchange. It's a complicated piece of endeavor. And to give you details on all these components, I want to introduce Manoj, our CTO, and the rest of the team. Casey Bowman is our resident Bitcoin engineer. We have Alexi, who works on EVM, and Anand, who's the head of infrastructure. So. You're on mute, Manoj.
Damn it.
Okay, so sorry, go on. George was telling me something.
Okay, thanks, Chandra, for the intro. So I want to spend a little time today to go through the different components of what makes this entire network work. So the Portal network consists of swap clients. You have the Portal OS nodes and chain-specific contracts, and they all work in synchrony to make this thing possible. Now, the Portal network is entirely non-custodial. So the assets are held in native chains like Ethereum or Bitcoin, but there's an accounting that occurs in what we call as a attestation layer. And this allows for highly customized AMMs on each chain. So that's the magic, right? Because this is a cross-chain atomic swaps with the AMM. So the complication is the AMM part. No one has successfully demonstrated AMMs built on Bitcoin, which is not Turing complete, which doesn't have smart contracts. So we spend the most of the time working on that bottleneck. And like Chandra mentioned before, we mainly have three network participants. So there are liquidity providers, there are validators, and there are traders. So we pretty much know how LPs and traders work. So I'll quickly describe what validators do. So their job is to facilitate swaps and to make sure transactions are processed in a timely and orderly way, appropriately. So a set of validators control the flow of funds, and they witness almost every transaction. And these validators, they track balances across chain in our attestation layer. and they witness events and they execute instructions. So they maintain the attestation layer, which tracks all the flow of funds. So we designed the network in such a way that even if there is an attack, it's as atomic as possible, meaning the worst that could happen is, the swap gets rejected or fails, but you won't lose any money. That's the atomicity that we were targeting. Now there's a lot that goes into building these components, especially on the Bitcoin side. We did most amount of innovation, and my engineering team will actually describe some of the critical components that we leveraged. But since this is an introduction call, we don't want to bore you with all the details. So we will surely reveal all the information through our website as time goes on, and also how it works, and different versions of white paper and a roadmap of things to expect.
Awesome. What is the whole premise behind this is what are the properties that we want in this interchain liquidity network, right? So one, we want people to be able to easily access all of the liquidity locked up, irrespective of what chain it's coming from. Two, we want incentives to be engineered for liquidity providers where they can just simply lock up their BTC or ETH or whatever it is into the pool, and in return for locking up their liquidity in the pool, the higher the volume of transactions and trades that are going through, the more they get rewarded. And then we also want the validators to be incentivized to maintain and enforce the AMMs at all times, secure the network, maintain and promote the adoption, and make sure that the rewards are actually distributed according to the rules set forth. So this is a complex piece of machinery, right? It requires a lot of moving parts. And when you go through different components of what makes this happen, Manoj can actually start with describing each of those components.
One of the, we talked about how you have this network functioning with validators, liquidity providers, and obviously users. But there's a lot of complexity in designing this AMM, especially on Bitcoin, because Bitcoin doesn't have smart contracts. So to achieve this, we have to build a lot of custom building blocks that are unique to Bitcoin, but they're also much higher in terms of scope than just the DEX and the liquidity protocol. To give you an idea of some of the things that we had to build, we have Casey Bowman, who is our in-house Bitcoin and Lightning expert. So he'll describe one of the components, a channel factory. So Casey, go ahead.
Yes, we're developing a channel factory, which I'd like to go through a little bit here. Just a simple explanation of it from this summary document I created. So can you see that? Can you?
We can see your screen. All it's showing is the Zoom window.
Oh, it's not a different
showing your Firefox.
Yeah, no, it's got the wrong. Yeah.
Okay.
There we go. Now, can you see?
There you go.
Mm-hmm. Okay.
Yep. Cool.
All right. Great. It's meant to be a means for the liquidity providers to work with the hub and try to do stuff as much off-chain as possible with regard to all the rebalancing that happens and all the rest. And so what we have is a channel factory where you have an initial hook transaction, which creates a multi-sig. That's on-chain. And then from there, you have an additional allocation transaction, which then distributes to various sub-channels. These would be two-party channels that then would go off and do their business. And then we could rebalance on the fly off chain. You can have updates in the subchannels using L2 or Lightning channel or a duplex channel, various different ways of doing things. Of course, L2 in the future. With regard to the allocations, those can be done through a duplex mechanism using time locks and a invalidation tree that allows you to do this rebalancing of the Lightning channels completely off chain.
Excellent. And in this case, we're talking about channel factories being the easier to maintain, low overhead way for liquidity providers to actually send their liquidity to the hub that is maintained by the validators, instead of each one having one anchor transaction and then, you know, paying lots of layer one fees. We can compress that whole thing into that's the utility I'm seeing of channel factories.
Okay. So the heart of the entire network would be the Portal OS. Now, to hear what Portal OS is and what the vision is, we have Anand Suresh, who is the architect, and he maintains the entire infrastructure for Portal. So take it away, Anand.
Thanks, Manoj. So as Chandra and Casey and others have already pointed out, there's a fair bit of software pieces that make up the entire ecosystem of software stack that we run on Portal. And one of the first things that we discovered was it's not simple to run the stack. There's a lot of complexity with all these various pieces, installing them, maintaining them, managing them over time. It's a fairly difficult task. And unless all of these pieces are configured correctly, you may or may not be able to use the rest of the network. So to mitigate all of this complexity, we came up with the notion of Portal OS, which is essentially something as simple as being able to download an operating system image from the internet and using it to boot a computer, much the same way you would, boot up a Linux machine or a Windows machine. It pretty much operates the same way. But the difference being, in this case, it comes preloaded with all of the pieces of software that you would need, and a helpful installation guide or wizard to help configure the node for connecting with the network and providing all the services that you would need. And this is going to be like the same for anybody. It could be a validator, it could be a liquidity provider, it could be an end user who wants to run their own node, and the operations remain the same, the configuration modes remain the same. And it's not just that we bundle everything together. There are certain power users who run their own Bitcoin nodes, who run their own Ethereum nodes, and would prefer to leverage that infrastructure. And Portal OS comes ready to do that. So if you already have some existing infrastructure pieces that you're running, Portal OS will allow you to reuse those components in conjunction with the rest of the Portal software stack to make sure that you are connected to the network and are able to use all of the services that the network provides.
Awesome. Thanks, Anand.
Was that a
good that came out very good, yeah.
All right.
That came out pretty good. So, Alexi, are you ready? We can go ahead and get your piece into.
Just tell me when you're ready.
Okay, I'll do a little intro. So this is, we have Alexi Malayschenko, who architected most of the EVM contracts and is building a lot of components for the AMM on the EVM side. But we also went beyond that, and with an eye towards usability, we wanted to have lower fees on Ethereum. So we developed our own layer 2 Ethereum system. So Alexi will now describe what Thunder is and how it will be useful.
Yeah, so Thunder is a blockchain agnostic payment channel system, and it allows instant off-chain payments by sharing signatures with a peer-to-peer network. The signatures can be used to actually settle the channels on any type of smart contract system. Initially, it was created to work with Ethereum, but you can actually work with any Turing-complete system like Eternity or Cosmos, potentially. Yeah, so it's optimized, unlike some payment channel systems, it's optimized for atomic swaps, which means that whenever the secret is revealed for the locked payments, it unlocks every payment with that secret, which actually avoids all the need for the back and forth communication between the nodes and speeds up the atomic swap very significantly. Additionally, we have layer 1 atomic swaps, which work on all EVM chains or any other smart contract systems like Eternity or anything that supports smart contracts and basically SHA-256 hash algorithm. Yeah, I mean, that's basically all I have.
Well, so the one thing that we haven't discussed so far, thanks, Manoj, and thanks, Casey, Alexi, and Anand. The one thing we haven't discussed is how all of this comes together to maintain the incentives of the entire system. So when you look at it from a naive perspective, yes, you could have layer 2 atomic swaps using an order book, and you can just connect the Bitcoin people with the ETH people, and it'll all work out. Unfortunately, it's not so simple because the design of incentives to incentivize both the people who maintain the network, enforce rules, maintain consensus, keep track of all of the attestations and the flow, as well as the people who are incentivized to actually provide liquidity, because a market isn't a market when there's nobody to trade. It requires a few major things. One is, what are these validators risking in terms of capital? What are they locking up? What are they staking to be chosen to be a validator, to be able to get the rewards for the volume of trades that go through the network? That's one. And two, how are the liquidity providers incentivized to actually lock up their liquidity and get paid a certain amount per time, which is also dependent on the volume of transactions going through. That's where the token comes in. A network of this kind, we don't think works without a token. And so we will be talking about how the network is designed, how the incentives are designed, and how it all comes together in terms of the token rewards and incentives for various participants and various functionaries or operators in the network. And like Manoj said, we don't want to throw all of this information at you at one go. You'll see our new website. It'll have a lot of detail about all of the components. It'll be unveiled in a stepwise fashion. And because it is a complex piece of machinery, we didn't want to write an 80-page white paper in one setting. So each component will be described on its own in full detail, and each modular description stands on its own and integrates into the big whole. So you'll see all of that coming.
There's a couple of things that we want to mention before we wrap it up. We'll be launching our alpha version of the portal DEX pretty soon, and we need volunteers to test. So anyone interested, please reach out to me or George or Chandra. We'll also have a link in the description where you can sign up. As we mentioned, validators and liquidity providers are major network participants. So anyone who wants to, reap the rewards of staking, they can be a liquidity provider on any token. So they can reach out to us. We have a Google form you can fill out, and people who are interested in running the node and being the validator, they can also sign up. So we'll have all of those links below. So please feel free to sign up.
Well, that's the announcement for today. We are going to do this at a very regular cadence. In addition to all the integrations and partnerships that we're working on, you'll also see an update of any time there's an update on the website. There's a new component, details of the new product or component released. We will do one of these short sessions and a walkthrough. So thanks everybody for joining, and look forward to more.
Anyway, all right, guys. Peace.
Awesome. Thank you.
Yep, later.